Let's take a look and turn our attention to the possible repercussions from the West's economic sanctions on Iran, with the International Monetary Fund warning of a possible 20 to 30% spike of the price of oil if Iran exports are disrupted. The IMF warned that if the West imposed financial sanctions on Iran, it would be a tantamount to an oil blockade, and the shock to the market could be as bad as from Libya's revolution last year. Iran produces 5% of global oil output. Moreover, if Iran goes ahead with a threat to blockade oil exports via the Straits of Hormuz in the Gulf, the IMF said the shock could be even greater. About a quarter of all oil produced globally and some 40% of all oil exports, including those from Iraq, Kuwait, and Saudi Arabia, are shipped through the Straits each year. The IMF said in a regular note to the group of 20 leading industrialized countries, suggesting that a blockade of the Straits of Hormuz would constitute and be perceived by markets as foreshadowing a sharply heightened global geopolitical tension involving a much larger and unprecedented disruption. The market is already pricing in a small risk of an escalation of tensions between Iran on the one hand and the US, Europe, and Israel on the other, according to the IMF's estimates. Western countries have been threatening sanctions if Iran does not halt its nuclear program, which they maintain is being used to develop weapons. The fund warned that the impact on oil prices of either scenario would be accentuated by the current tightness of oil supplies. The IMF said the oil stockpiles of major oil-consuming countries are lower than usual, while the big oil exporting countries have limited short-term ability to increase supply. Iran is the world's fifth largest oil producer, extracting 3.5 million barrels a day. Other members of the OPEC have some 3.8 million barrels in spare capacity that could eventually be made available. However, in the case of an oil blockade by Iran, access to oil supplies from other major OPEC countries, including crucially Saudi Arabia, would also be cut off.
And today we have the honors of speaking live with His Excellency Majid Bizmark, the Iranian ambassador to Thailand. He's on the line with us today. Welcome to the program, Ambassador.
Thank you very much. Good afternoon to you and your respected audience.
Yes, sir.
Yes, Ambassador, can you please clarify to us a little bit on this EU sanction move that's going to block oil trade with Iran? What is your response on this move?
Bismillah ar-Rahman ar-Rahim, in the name of God, the compassionate, the merciful. Such an issue like oil sanction against Iran actually is only a part of psychological warfare. The EU decision to impose oil sanction on Iran will create more economic challenges. And it's clear indication that they do not have real political independence in the decision-making. And actually their main objective and their main target is to put pressure on Iranian nation. We do believe that the oil is not a kind of political commodity. Rather, it's a source of energy which should serve development for countries and also bring more welfare for the nations across the globe, especially in developing countries. To use this commodity as a kind of political mean could terribly disturb the stability of the oil markets with major consequences on overall energy markets around the world. And actually will have serious adverse impacts on the consumers of the energy. That's something which I could say.
I see. Ambassador, and now we understand that Iran is producing 2.5 million barrels of oil per day. To what extent would this embargo affect Iran's oil trade?
First of all, let me correct you, which you mentioned the size of the production, 2.5. that's the size of our export, not the size of production. We do produce more, of course.
Okay, just
Okay.
exports.
And,
on that.
but you know that the share of the Iranian oil export to EU members is just only 18% of our total oil export to the world, and which for this share we have already new customers for Iranian oil from rest of the world. And I should add that sanctions will have no impact on our nation, and we rather give more motivation to our people. And such moves can never deprive the Iranian people of their rights. And that's a good experience, which sanctions have proved ineffective in the past and will prove futile in future too.
Okay, Ambassador, frankly, what is going to be the reaction from Iran? There's a source saying that your government might be closing the Straits of Hormuz, the main passageway. So is there a high possibility of doing so?
With regard to the situation in the Persian Gulf and Strait of Hormuz, the Islamic Republic of Iran considers this area a strategic sea route, and it's our firm. Actually, it is an international strategic water route, and it's our firm position that we see it as our responsibility in order to preserve security inside of this region. And therefore, all littoral states, they could use the security, and actually the security should provide by the littoral states. I mean, Islamic Republic of Iran, of course, spares no efforts to maintain the security of the Persian Gulf region.
I see, Ambassador. Yeah. And if Iran does go and close the Straits of Hormuz, the United States in particular have come out to say that it will use its military presence to force Iran to open the straits. Do you think if things are going on as such, is there possible that we can avoid a military confrontation?
As I mentioned, that we are responsible in order to provide regional collective security on that region. And but some foreign powers should not think that they can decide which country could be included or excluded from the security in Persian Gulf. That's the right of the countries which they're living there. And we are responsible in order to provide, as I mentioned, to provide peace and security collectively in the region, also in Persian Gulf and Strait of Hormuz.
I see.
Yes, Ambassador, let's move to the bilateral ties between Thailand and Iran.
Yeah.
Can you please update to us on that, and how much oil do we trade bilaterally?
We do not have export oil to Thailand, but about bilateral relations, that's in a very good move, and exchanging of economic delegation and political delegation is going on between two countries.
Ambassador, how about the tourist exchange between the two countries?
From Iran, something about between 140,000 and 150,000 tourists yearly. They will come and visit touristic site in Thailand. And the volume of on bilateral relation in the field of trade, which I could refer to, that's for the year 2011. The latest figure shows more than $1.2 billion. That's the volume of trade between two countries, which it shows some more than 40% increasing comparing to last year, 2010, volume of trade between two countries, Iran.
I see.
Okay. Well, thank you very much, Ambassador Bizmark, for your share of knowledge and information with us today.
You're welcome.
Thank you for joining
Thanks
us.
a lot.
Thank you.
Goodbye.
And next up, we're moving on to Thailand and India have finalized the key points of a comprehensive economic cooperation agreement, or CECA, during a state visit to New Delhi by the Thai Prime Minister Yingluck Shinawatra. Yingluck, the chief guest of India's Republic Day, which is today, met with her Indian counterpart, Prime Minister Manmohan Singh, to settle key issues of the crucial bilateral agreement, which will cover more than 30,000 items of trade in goods and services, as well as in investment. The Comprehensive Economic Cooperation Agreement is expected to be signed in the middle of this year. The bilateral value of trade between the two countries is forecast to rise significantly from last year's $8 billion once the agreement is effective. She said the private sector plays an important role in enhancing the friendship and cooperation between the two countries, adding that ASEAN is a strong market with 600 million population, and Thailand could be a gateway for India businessmen into ASEAN market. The Minister of Commerce and Industry, Anand Sharma, said the time has come for both countries to look into the other areas like investment and a global partnership apart from just the trade. According to Sharma, India is aiming to increase the share of manufacturing goods from 16% to over 25% within a decade. Sharma said that the Delhi-Mumbai Industrial Corridor, a landmark project of India, offers excellent opportunities for Thai companies to set up manufacturing facilities. The Minister of State for External Affairs and Human Resource Development, Asean, highlighting the historical relationship between India and Thailand, said that trade and economic cooperation is central to India-Thai friendship.
Now, within the annual World Economic Forum in Davos, the single biggest issue for the global economy in the next 10 years is job creation in both developed and developing countries, Citibank CEO Vikram Pandit said yesterday. Speaking to the media as co-chair of the World Economic Forum, Pandit said as many as 400 million new jobs would need to be created. Pandit has highlighted three-pronged macro approaches to achieve growth. The first is the recommitment to globalization by countries around the world. Second is the need for the public and private sectors to work together as they have been at odds for too long. And finally, third, to have a robust financial system. He conceded that there has been a great deal of anger on the financial crisis, and Citibank has adopted 3 new criteria for lendings. He said, for my bank staff, responsible finance will mean that the business must be right for the clients, add economic value, and systematically responsible. While the growth issue is ushered to the forefront of the developed economy, especially the crisis-hit Eurozone and the U.S., Paul Polman, Unilever CEO, reiterated that growth and sustainability must go hand in hand. Polman said that the World Economic Forum has a fitting theme of great transformation, shaping new models to achieve growth and sustainability. Unilever has 3 call for action agenda: food security to feed the 1 billion people who still go hungry every night, new agricultural models which boost productivity and meet needs of people for a higher standard of living and changing dietary, and forging a new form of partnership with NGOs. Peter Voser, CEO of Royal Dutch Shell, said it has become clear that the triangular relations between society, government, and business have failed to deliver results, and a new approach is needed. He added that the pressure for job creation, energy supply, and food supply will grow. Yasushika Hasegawa, another World Economic Forum co-chair and CEO of Takeda Pharmaceutical Japan, sees 2 great transformations taking place. The first is the economic growth shift to emerging markets, and the demographic where the global population is tripling from 2.5 billion in 1950 to 8.6 billion in 2040. He said the Japanese government is working on a new growth strategy to generate growth with new industries that is also support global agendas such as the environment.
And in a big picture, according to PricewaterhouseCoopers' 15th annual global survey, nearly half of 1,258 chief executives polled worldwide believe the global economy will decline even further in the next 12 months. Just 15% of them said the global economy would improve during 2012. Short-term confidence also fell among CEOs in the Asia-Pacific region to 42% from 54% last year. China saw the biggest decline in the region. The world economy is interrelated, and talk of decoupling or the Asian economy is going its own way has not materialized, said the PricewaterhouseCoopers International Chairman Dennis Nally. But the survey noted that the greatest optimism among CEOs rested with prospects in the emerging markets. The Pricewaterhouse survey noted, however, that top executives had learned how to manage through difficult and volatile economic times. 40% of them were very confident of revenue growth in the next 12 months, although that was down from 48% last year. It was a significant improvement over the 31% figure in 2010. The results of the survey were released at the annual World Economic Forum in Davos. It found that 80% of CEOs were most concerned about uncertain economic growth, while 64% worried about the instability in the capital market. Asia-Pacific CEOs ranked exchange rate uncertainty as their second concern. The ongoing debt crisis in the European Union has deflated confidence in business growth around the world, Nally said. Even the fast-growing economies of Asia and Latin America are not immune to realities of continued economic stagnation, belying the notion that the global economy has decoupled. According to the respondents, the best strategic growth opportunities in the next 12 months will come from increased shares in existing markets and from developing new products and services. As expected, the biggest decline in confidence was among European CEOs, but there was also a marked decline in confidence in India, with 55% of chief executives in that country very confident of growth compared with 88% last year. Overall, 70% of CEOs plan to make changes to their strategies in the next 12 months, driven primarily by customers' demands and economic conditions. Cost reduction remains key, though its priority is deteriorating.